May profits be upon you and happy new year. Happy 2026. May profits be upon you and your entire year. Ha ha! Now, we're going to take a look at the US dollar index. All right. And thank you for tuning in and waiting patiently for this video to come out. Now, if we look at the economic calendar ahead for the week ahead, it's non-farm payrolls that we're going to be focused on. That I'll be focused on anyway. All right, when's up until when you on non-farm payroll weeks, the market can tend to bunch up right around Wednesday and Thursday. All right, it could start to consolidate, so you want to be careful of that. All right, because they're waiting to see what the numbers are going to be. All right, but Monday, Tuesday, Wednesday, those are the days to get it in for real, for real. You can trade Thursday and Friday. All right, but I would wait until after the news and then fade whatever the news is. You know what I'm saying? But Tuesday we got ADP, we got Jolts, we got ISM, we got good stuff, and the Aussie dollar has CPI on Tuesday. You want to wait until Tuesday to trade that, but I'll have a forecast for it. But yeah, that's what's coming up this week. Now, what are we looking at on the US dollar index? US dollar index on the monthly time frame, you can see uh, as far as structure wise, you can see that we have a high here and a low here. All right, that's the swing structure, the swing structure, right? And if we made a low here, lower high, lower low, this could be the potential lower high for the next lower low. You understand? That is the macro swing structure. Now, when it comes to internal structure, that is between the last high, which broke structure to make a new low. All right. And whatever happens between this high and this low is internal. And we have higher highs, right? Higher low, higher high, higher low, higher high. And this could be the potential higher low for the next. Whoop, I don't know what just happened there. Let me see if I can I can't get it back apparently. All right, for the next uh this will be the potential for the next higher, this could be the potential higher low for the next higher high. All right, but when we're measuring for these movements, if I can just get out of this, we're measuring for these movements. You're going to hear me say this a lot. You got to use your fit from the last high to the last low. Stretch all the way over. And then you measure the movement up. All right. And where are we? We're at OTE levels, which is between the 618 786. We want to take our shorts above the 50% of this trading range, right? We want to take shorts from here. We want to take longs from down here. All right. But below and above the 50% or the equilibrium, the EQ, if you will, of the range. All right. And this is correction territory. All right. This is the correction to this move. Okay. And we got to wait until there is a change in the state of delivery before we start to consider taking shorts or longs. All right. In this case, we are bearish because we broke structure here. We are bearish. This is the correction to the move, and we got to wait until this correction is over. And what will tell us it's over when we see a sharp move to the downside from the OTE levels, and which should include some kind of break of structure. And you can see we consolidated, we we manipulated, not we, but the market manipulated, and then we see this distribution here, and then another consolidation. Now, what could happen here? Same thing that could have happened here and here. You see that I have this channel, this ascending channel here, and it seems to been it seems to be holding very well. You understand? And that's the only reason why I haven't marked here. Not to say, hey, well, you need to start taking longs anytime it reaches there, or you need to start taking shorts anytime it reaches the top. No, that's not what I mean. That's not the way I trade. All right, we are in OTE levels up here. All right, uh, and you see the movement down. That's a sharp movement down that happened 2025 came in months, we started moving down, and then now we started consolidating for months, right? The last half of the year, and what I'm waiting for is a definitive move to the upside or downside. All right, we're in consolidation. We'll probably see how long we were here, months. See how long we were down here, months. All right, we're doing the same thing here. We have to be patient. All right, we're right in the middle of this consolidation. So taking buys or taking sells, would be kind of silly. All right. Now, last month, last to end the year, the market closed well below the previous month's trading ranges. All right, and you would think, all right, there's a good chance we're going to continue bearish. All right, but we are in a consolidation. The rules change. All right, your technical analysis ain't going to mean much here. You're going to see bullish fair value gaps get violated, and you're going to see bearish fair value gaps get violated. You're going to see order blocks and whatnots on the lower time frames get blown through because we're in consolidation. So you got to wait until high or low of the range is you know we see a breakout, even a fake out will let us know, okay, if it comes back in the range, you know what we can do. All right, you can start making plans. Now this is on a weekly basis, right? What do we see here? Months, weeks, sorry, weeks, 1, 2, 3 of straight bearishness, leaving fair value gaps towards the downside. All right, we see the market hit this volume imbalance here. All right, you'll see the volume balance on the next lower time frame on the daily. All right, but you can see that price hit that low, and we started to lose momentum to the downside. We have a bullish candle, then we follow that with a bearish candle, but it closed back within the range of the previous candle. All right, which again says it says the market is still consolidating. All right, the very next candle we have an inside bar, which is usually a kind of a hint that the market is about to change direction. All right, see that inside bar here right after this high was made, and then boom, boom, boom. Just an example. All right. Doesn't always work out that way, but a lot of times it does. And I'm looking for something to say, the market is tipping its hand. You understand? So we've already hit this trend line, the support line of the ascending channel already once, twice. All right. And this was a liquidity sweeping low here. All right. Do I think the market needs to come back down here? Only if it intends to take that sweep that low. That's what I believe. I don't believe that we're going to see the market go past this low. I think this is a protected low. Why? It led to a new high, and you see the pullback. I'm looking for something that says the pullback is over. You understand? All right. Now we can see continuation of the bearish momentum. We can see continuation of that to these lows. Yes, we could, but I think there's a better chance that we may see the market turn with this, the way it is starting to consolidate under here. I have that dotted line here because if the market breaks that line, breaks this high, it would signal that this pullback is over and that this low is protected and that we may be heading up. All right. Up to what? I don't know. That this was overcome here. We have a close below that. That created an order block up here. All right. The market came back and tested that order block already mitigated it. So this high becomes a focus for me. Will the market head back towards that high? I don't know. We're going to find out. We're going to find out certainly. But that's when I would become interested in saying, okay, sure, we need to be looking at longs if we get a break and close above these highs. Okay. And that's at what level? 98, 723. All right. Now, let's go down to the daily where I get down to the nitty gritty. All right. This is that order block, the higher time frame order block here that the market came back, tested, and descended from. All right, cool. Here's that volume imbalance here. All right, where the market just seems to skip a beat there. Yeah, that's a order. That's a volume imbalance. Mark came down and tested it. You see the reaction from that level. So it pulled up, and they usually act as speed bumps where the market gives you a reaction. Well, it came back to that same level and then reacted again. 5 days of bullish activity, a week, a little more than a week of bullish candlesticks, right? Now, what I want you to notice is that there was a bearish fair value gap here. All right, that the market pulled above, the sellers defended, and then the very next day on Friday, the market closed just above that bearish fair value gap. So what does that become? It becomes inverted. It becomes an inverted fair value gap, an inversion, if you will. All right. And what could happen with this? The market continues higher from here and trades above it. All right. Using it as an area of support as opposed to resistance. It failed. And when you have a failed bearish fair value gap, it can become an inverted bullish area of support for higher prices. All right. That's not the only thing. I become like I marked this area here on the higher time frame. I become a confirmed believer in bullishness, if you will, once the market breaks this high. Once we get above these bearish candles, once we start trading above these bearish candles and we close above them, yeah, I'm waiting for the market to pull back into this bullish leg, and I would be looking for the order block or the fair value gap that comes from it, and I would love to take a trade higher. Yeah, I would. This will be an internal break of market structure, and uh, that would signal that this pullback is over, and that because we already showed you earlier that we are in. No, I didn't. I didn't show you that. Okay, I'm going to show you right now because this is the low and this is the high. What are we going to use? What are we going to use? We're going to use the Fibonacci retracement tool, and we're going to go from the low to the high, and you can see we've reached 618, the 618 fib level. All right, this is OTE level. All right, and if we see the market break this high, I'm looking for price to come back, probably test the equilibrium to continue higher. I'm not saying it's going all the way up to the top, but I'm thinking that these highs here are going to be a great target because there's buy side liquidity above these highs. All right, for those that took shorts. So yeah, that's where I'm at. That's where I'm at on it. Am I bullish on the US dollar index? No, no, I'm not bullish. It's bearish right now. The US dollar is weak, but it's showing some bullish momentum over here. And what I'm telling you is that I'm not ignoring this. All right. What I'm telling you is that the market broke a bearish fair value gap. That was supposed to act as resistance and continue. We're supposed to see continuation down from there. That's what was supposed to happen. All right. It could still happen. The next candle could be a bearish one where it closes below this low. All right. It could. But I'm thinking that because it took out that fair value gap and bumped from this volume imbalance. Amen. And we already have a low down here along this the support line of that big ascending, um, the ascending channel. Amen. I'm thinking that there's a good potential for the market to continue higher and break these highs. Once it breaks these highs, once we see a close above those highs, and this is a bearish fair value gap, we're going to see a reaction, a pullback into this movement up, a correction to this movement up, and I'm looking for the market to give me a reason to jump in. This would represent a bullish fair value gap if that happens. And I should point out as well, these up close candles become a breaker bar, breaker block, sorry, and can be used for support for higher prices. That's all I'm saying to you. So I am looking out for that. All right. The market is the US dollar is weak, but I think we have some signs of strength. And I gave you my supporting evidence. You tell me what you think in the comment section. Hey, I got a couple of videos that I got to put out right behind this. All right, the next one will be the Euro USD, and I'll follow that with the Pound USD. Hey, thank you for tuning in, and leave a like, a thumbs up if you like what I'm doing, and make sure you leave a comment. All right. The comments mean a lot to me. I need some feedback. I go off of that feedback. If there's something that I'm not mentioning or something that I should say or something you want to put my attention on, you let me know in the comment section, will you? I will see you in the next video. Thank you for watching.